significant degree in the Forex markets?
No, I don't think so. I think it's something that you don't have to stay up waiting for it because it comes out about 3:15. So I think that it's what we expect is a 25 cut and a 50 cut for the discount rate. But in the statement is what we're going to really look at, and we could see a little bit of hawkishness in there with inflation expectations continue to escalate here, and we get inflation numbers on Friday, which headline might even come up above 4%. So even though the talk about 50 is still there, but look for a combination of growth concerns with subprime, but also inflation comments could come out of the statement as well.
And if we do get that hawkishness on inflation, would the dollar take it badly, considering that even though it might mean that they're less inclined to aggressively cut interest rates at the Fed, it might also mean that they might not be able to stave off an economic recession, which naturally would be bad for the dollar, wouldn't it?
Perhaps. But I think that the recession is so dependent on the economic data. But the economic data continues to be quite favorable, and we saw that with the payroll numbers and the GDP revisions, and the retail sales comes out later this week, which should be higher than expectations as well. So overall, we don't see the consumer slowing down, and the consumer is such a big part of the overall U.S. economy. Their wages continue to go up, so they continue to spend. So we don't think a recession will see a bit of a contraction, but we don't see a recession. Okay,
so if we get the Fed rate cut, whether it be 25, whether it be 50, we continue to see some stronger than expected economic data. Might the US dollar be finally set for a bit of a rebound, considering that at this stage there are so many one-way bets against the greenback that it wouldn't take too much to unwind some of that, right?
Yeah, that's a very good point, and we saw that last week a little bit as the risk aversion fell off the market a little bit. So with that being said, at the same time we're seeing a little bit more hawkishness come out of Europe and Great Britain yesterday and a couple days ago last week. So with that being said, we don't see too much movement over the next couple days here, but just balancing off a little bit more concerns on inflation globally.
What is the story right now for the euro dollar, considering that I've been speaking to some people in recent days who are saying that the ECB needs to give up its hard talk on inflation. It needs to face the economic realities that it could be behind the curve, and it also needs to start thinking about cutting rates sooner rather than later. Is that your thought as well, Steve?
Yeah, and that's what the market's seeing with the economic data. Europe is slowing down, and that is a fact, and they have to control that aspect. And with the other central banks like Canada starting to cut rates, and Bank of England cutting rates as well, that is going to be the concern. And what we expect Europe to have slower growth in 2008 than the U.S. So I think that we'll start to see, we might see one more rate hike in the ECB come in the first quarter, but come the second half we could see the ECB start to cut rates.
Is it possible therefore that we might have already seen the top in euro dollar?
Yeah, I think we might see a bit of a euro strengthening, but I think we're very close to the top, and we should see the U.S. rebounding, especially in the second half of 2008.
Very, very quickly, a question on the Australian dollar, which you and I both love. There's so much M&A talk, mainly talk and not action, going on in the Aussie market at the moment, particularly in the mining space. Is this, even at the margins, fueling any interest in the Australian dollar?
Oh, it is for sure. But with the Aussie, we got to come back to the fundamentals. Growth is still there, and interest rate hikes are on the table. So all factors are proving for a stronger Aussie dollar. And this recent talk of M&A just helps the current account. So look for that Aussie to keep moving up here.
Great. Thanks so much for joining us today. Steve Rowles,
thank you.
analyst at CFC Seymour in Hong Kong.